Grow an actively managed portfolio of gold, silver, platinum, palladium, and rhodium with Auctus Metals today.
I'm buying platinum and buying platinum and buying platinum. Now's the time, and timing, you might say, but it certainly paid off. 70% gain. I actually wish I would have bought more, but don't we all? When things go our way.
Hello again, everyone, and welcome to another edition of the Auctus Edge, where we look to give the edge that precious metals investors are looking for. David Morgan, better known as the Silver Guru, joins us today. David knows the markets and precious metals, and he's here to give us his insight on just that. David, welcome to the Auctus Edge. How are you doing?
Patrick, I'm doing well, and it's been too long. Good to see you again.
Good to see you again. Also, yes, it has been too long. So, David, I'll start off with a tweet that you recently posted on your X account, your Twitter account, where it's about Tether buying more gold last quarter than many other central banks. If true, what's your take on this?
Yeah, well, my take is interesting. My overused word. First of all, I am somewhat suspicious of Tether. And I say somewhat. I mean, I don't want to go, it's without objective fact, I don't want to just go off in the weeds. Nonetheless, what is their asset backing true? You know, when the Evergrande thing blew up in China a few years back, there was a lot of notations that Evergrande had paper with Tether. Now, I don't know if that's true. I don't know if that's false. I do know it was put out on the web. Okay.
Mhm.
So, with that in mind, without seeing their balance sheet, without an audit, who am I to say? But nonetheless, I am a little suspect. Now, moving on to the gold side, I find it fascinating that two things are taking place. One, purportedly, they're buying all this gold. Let's put that on the back burner for a second. And above that, we have a lot of discussion around Tether taking on the U.S. debt market, buying treasuries. And that, of course, is very, very useful, helpful to the United States government's issuance of debt notes that are not as popular as they once were. Debt notes that are not really rated as high as they used to be. Moody's has
Mhm.
downgraded the ability of the United States to pay back this debt and downgraded the ranking, the rating. So, what do you do to make up for that? Well, what do I teach? What have we talked about since we've known each other? We talk about the ultimate money, not currency, being the precious metals.
Yeah.
And I've lately been calling gold the money of last resort. In other words, when all else fails, gold won't. There's no counterparty risk to it. Same thing with silver. So I find it interesting if they're really moving into the U.S. debt market to um, in Tether as maybe their primary or one of their primary assets and buying gold, it suggests to my thinking, and of course, I want to hear what you have to think about it, that they kind of are doing what the central banks are doing. If all else fails, break glass, we've got gold, no counterparty risk.
Yeah, it's a great point. For myself, I typically will see a headline. I will let people sort it out and I will give it a few days to stew over and simmer and then I'll usually have something to say. So I guess that's the easy way to say no comment for now.
Especially on our rumor. Sorry if I interrupted, but yeah,
Right.
that's my normal, but that's why I put the caveat in, if verified or could be verified, question mark. But it's something to note. Definitely something to pay attention to.
Yeah, totally agree with that. So we'll see how it unfolds. For sure, it is something to take a look at. David, we've spoken for a good number of years, known each other for some years now. We saw sideways silver for a number of those years, and I want to go back to an old question that's been asked, but again, maybe things have unfolded in a different way. So I just want to ask you, what in your view pushed silver, excuse me, to finally start this notable upward run that we're on?
It was a gold breakout. I mean, I really strongly think that is what happened. I mean, gold, you know, struggled around the $2,000 level for a while, if you remember.
Yeah.
And then once we got through the 2000 and that became support rather than resistance, we moved up into the threes pretty quickly. And then from there up into the roughly 4,400, you know, top that we've seen recently. And now we're backing and filling in a what I call high level consolidation around that 4,000 level, up above and below it. I'll probably stay there for a while, I'm guessing.
Yeah.
But as that was occurring, silver was just sitting there, sitting there. Finally, bang, it took off.
Yeah.
And this year's gone by quickly. At my age, they go by quicker and quicker, Patrick. But the April newsletter of the Morgan Report, my premium paid service, I put in there, gold had already made it to 3,500. And I said in that letter, gold will remain at 3,500 through the entire summer and perhaps longer. Therefore, you could consider swapping gold to silver,
Yes.
or buying platinum. I would not touch gold until we get through the summer. And that turned out to be a great call because platinum took off like the day after I published that April edition. Silver took off about the same time. And now, if you look at year to date, platinum has outperformed gold and silver's outperformed
Yeah.
gold. Now, I said through the summer or longer, so I'll say I was halfway correct because Labor Day, I think gold started up again and it moved out of that 3,500 range all the way, as I said earlier, to about 4,400. So almost another $1,000 gain. So gold's on a tear, as we all know, but that's what brought it up. Now we're in a different dynamic, I think, with silver printing above 50, below 50, above 50, and we're finally getting prints at that level because in 1980 it was a momentary. It was
Yes.
according to my sources, which are like really good on the future side. That $50 print was a matter of minutes. One of the floor traders that's my age said no, it was more for like a few hours. But regardless, it wasn't even the whole day that was at 50. And so one day doesn't make a market. Not saying it didn't hit 50, but oh, it hit 50 in 1980. It hit it, but anyway, that number is kind of overdone in my view. And then in 2011, it never made it to 50 in the near month in the spot contract. It was 48 or 49. I forget the exact number. So now we are finally building some consolidation at the level, which means we can go higher, and we will go higher in my view. So I've maybe over answered that, but that's how I see it. I think we are in the final inning, Patrick. I think the next
Ah,
move is going to be very significant in price, and I don't think it's going to be that long in duration.
okay, great points. I can absolutely see a lot of the things that you were saying. You mentioned that interesting part about people typically buy gold or they buy silver and they just kind of sit there, but really you made that point where an investor they should consider, or yeah, let's just say they should look at or consider reallocating, rebalancing their precious metals portfolio where they can acknowledge the gains that can be made with the metals like silver, like platinum, relative to gold.
I say the more sophisticated investors definitely. I mean, you can do
Hmm.
it. The most easy is synthetically. You can do it in futures or the ETFs. You could even use the mining companies, but it'd be better to use an ETF. And so you could go long platinum and short gold, or just long platinum on an ETF. There's a couple of them. Silver, the same thing. You could use the SLV. I mean, I'm, my just anyone that's brand new, I always advocate having the physical real metal first. And once you've
Yes.
established your core position for a worst case scenario, no counterparty risk that you could actually spend if you wanted to. Once that's established, you want to go into the ETF or the mining shares or the futures market, even, which I don't recommend for hardly anyone. Go ahead. But no, I think that's depends on the level of the investor. I mean, most people really don't belong in the platinum market. It's such a small market; it can be tricky, and the spreads are really wide. But timing is everything, and platinum is like one third the price of gold. It cost 1,250 to get out of the ground. I was buying it between 900 and 1,000, building a position. building a position, and then I put it in my report. And I've told them verbally on the updates I do with the video for the premium members. I'm buying platinum, I'm buying platinum, I'm buying platinum. Now's the time, and timing, you might say, but it certainly has paid off. 70% gain. I actually wish I would have bought more, but don't we all? When things go our way.
Good man, good man. Yeah, I, I just find it interesting because the company I'm with, Auctus Metals, this is exactly what they do, where they rebalance people's portfolios, where it may be a time to move out from gold and then into silver or into platinum, and so it's always looking for that edge for investors. So I just find it interesting that, you know, it's becoming more and more heard for a lot of people where, like I say, we just sat on silver or gold and that was it.
I won't give names, but there are two very substantial people in our industry, and I know them both at a very direct level. And both of them do exactly what you said. But both these guys, one runs, well, I could say this because one runs a hedge fund and does
Mhm.
the swaps, and the other one is a very prominent commentator in this space. I'll just leave it at that. But I really like that. There was another, I don't think it's your firm, it might be. I was doing some research and something popped up that was new for me, and I never said I know it all. It was overseas. It might have been
Mhm.
Singapore, and they outlined what they did between the four, and that's it. And rebalancing between the metals is smart. In
Yeah.
fact, I think gold silver ratio still favors. In fact, I've been thinking about, I was going to say this morning, I didn't think about this morning, but I've been thinking about it for the last few months, maybe taking some gold and just buying more silver, although I probably have enough. But the ratio still favors, buying silver with gold. So I'm not sure I'm going to do it, but
Yeah.
you're right. So I'll give it back to you. I just wanted to emphasize the point that
Mm.
the
Yeah.
professionals I know do what you're saying.
It's good that it becomes more well known for investors, and it's just really more about giving people options anyway for something that they may not have seen or known about. So I appreciate you also coming forward and saying that yes, these are things that now maybe the more sophisticated investor to an extent or to a degree is really looking at. But David, last time silver hit all-time highs, 1980, I guess, like you said, and then 2011, where it was almost 50, still in that 48, 49 range. It was also fairly short-lived. And this time around, where we have $50 silver in this current bull market, people they're wondering how long is this bull market going to extend, and they're looking at, will we see $100 silver, $300 silver, $500 silver? So I'd like your opinion on this.
Yeah, well, you've probably heard me say it. I've said it on many, many interviews, that 90% of the move comes in the last 10% of the time.
Yes.
That's not a guarantee, but that's a metaphor for what I said earlier in our discussion, that I'm convinced that we're in the very substantial capital gain phase with a short duration, which
Yeah.
could mean, as an example, you see $122 silver a year and a half from now, and that's it, or 222, or whatever it hits. Um, Usually, in the end of all markets, you get that final panic manic phase. There's charts out there. I'm sure you've probably seen them
Mm.
where it shows kind of the stealth phase coming along, then it moves up, and then the you know Wall Street gets in subtly or whatever, and then the
Yeah.
public gets in and it goes way up, and then there's a little panic buying and it goes a little higher, and then it swoops down a little bit. Oh, last chance to get in, and it goes up a little bit more, but not to a new high, and then it comes really coming back down hard. I would like to see that. I really would like to see it, stabilize. But let me tell you,
Yeah.
and this is not very well known, in fact, and I don't really, I'm not attached to the Silver Guru moniker. I just put that on my email kind of as a joke, but I've been labeled that. You can or not, but this is one where someone said, "Oh my goodness, you are the Silver Guru." And here's a statement I made. When that 90% and 10% of the time, I said, "Well, is that true?" So I look back at the 1980 high. It was I forget, it was 8.7% of the time, so less than 10% of the time using my numbers. And it was like 89% of the movers. Anyway, silver in 1979, January, $6. Silver in 1980, January, a year later, was 50 temporarily. So that's a move that's very substantial in a very short amount of time.
Mm-hmm.
Now, it peaked and it came down. And here's the point I made that, a guy says, well, you are the silver guru. When it reestablished that high, the average price in 1980 for the entire year, so we're looking at an average price, was $20 the ounce. So think about that, Patrick. The highest it had been in 79 was $6. And in 1980, the average price was 300% more.
Yeah.
Silver goes to pick your number, 100, 150, 200. Say it goes to 100. And it drops to 75 and stays there. I mean, if you bought it at 25, 30, 35, 40, you probably wouldn't be totally upset. Yeah, everybody wants to catch the top, but that's extremely hard to do. But if it rebased at a new number, gold could do the same thing. It could go to 5,521 and sell off and come down on a spike high and then reestablish itself at 4,800 or something. Excuse me. So that is actually what I think will happen. But we're not going to see ever higher and higher parabolic move. It will go parabolic and it will move fast and it will be very difficult to take profits. But that's part of my job to tell my people, what I see, right or wrong, and a plan. I mean, to scale out. I mean, I've already built a guideline on how I plan to get out. When we hit 65, I'm going to X, and when we hit 75, I'm going to Y, and when we hit 95, I will Z. And if we never
Yeah.
get to 100, and we start coming down, and we hit 80, I'm going to W. And if it goes down to 72, I'm going to A. So I got it planned out because the last thing you want to do, especially for long-term investors, long-term holders, even speculators that get in late and ride a nice wave, is to give up all your profits. Never do.
Yeah. As I was looking through some of the news feeds was from Bloomberg, recent news where the global silver market faces a fresh risk after Chinese stockpiles sank to the lowest in decades with a huge volume recently shipped to London to ease a squeeze that drove prices to a record. David, what can you tell us about this squeeze?
Yeah, this is a tough one because, again, is it objective reality or is it, you know, is it just an internet post or is it
Mm-hmm.
something in between? I'd say it's something in between. But the facts appear verifiable that the SGE, the Shanghai Gold Exchange, and the futures market there has had more and more and more impact on the pricing of gold and silver than ever
Yeah.
before. And they're gaining more momentum, and they're putting vaults in Hong Kong and I think Dubai. You may remember, I forget. There's one or two, maybe three going in. So the Chinese are establishing themselves, in my opinion, strong one, that they are really becoming the most trusted source for not only futures but also for delivery in size to whomever is buying from them. I would
Yeah.
guess it's correct. I think it is. I think the last thing you want to do is just disrupt the market and get a lot of the new word the kids use, shade on you, where everyone is
Yes.
angry with you because you disrupted the silver market, you nasty, nasty Chinese people. Now our propaganda press will put out propaganda against the Chinese. Well, I love the Chinese people. It has nothing to do with the Chinese people. It has to do with the exchange or the political class or maybe the financial
Mm.
class. It could be I don't know, French people run SGE for all I know. It's probably not true, but you get my point.
Yeah.
I would just do what they're doing. I would keep the market calm, cool, and collected. I would make my position known, and I wouldn't disrupt the market deliberately. And if I keep accumulating and the market, let's say, gets under more stress or even further stress, it won't be because I wasn't a good player within the LBMA exchange system. But I do think that the trend is obvious. We're eating up above ground supply. That can't go on forever. There's really no way that the COMEX or the LBMA could really point at fingers at the Chinese and say, you ruined the market, because it is purportedly a free market. They need it for solar panels and all the electronics that they make in China and ship
Yeah.
overseas to everybody that buys it. And so they're just doing a normal course of business. And it's not their problem that we're in a structural deficit that's lasted for 4 or 5 years and continues. They're just trying to do
Mhm.
business. I do think that your bigger, your Samsungs, maybe your Apples, maybe 3M. I mean, a lot of these big conglomerates that need silver for their production are not thinking in dollars whatsoever at all. They're thinking in ounces. Hey, Patrick, you're my head logistics guy. You've worked for me for
Yeah.
10 years. How much silver do we use in a year? Oh, well, Mr. David, we use 1,000,000 ounces of silver in a year's time for all the products we put out at 3M. Patrick, I
Mhm.
want you to find a warehouse and I want you to buy me 2 million ounces. I don't care the price. I need to stay in business 2 more years guaranteed.
It does make sense because I think, not that long ago, a lot of these businesses were more on the just in time type of a scale. But now, uh, with that real estate market and the trouble it went through, we saw most of the availability of structures were warehouses. So you never know, that could be part of it. But David, the reason why I asked this question was because that word squeeze, we seem to hear it more and more, unlike before. So I just wanted to ask you, we keep hearing it. Uh, does it concern you?
Yeah, it does. I mean, it has a negative connotation. It's happened in the commodities markets, and almost any commodity you can name at one time or another. It's a rare event. I mean, the metals heads know about the Hunt brothers and the silver squeeze, and that's probably most people on the planet, that's the only one they ever heard of. But, rapeseed got squeezed. It's called canola oil, but in the early days, it was called rapeseed. There's been, cocoa, there's been soybeans. I mean, it does happen. It's usually resolved pretty quickly. The problem that you could see in the metals market is, unlike the agriculture or the softs, cotton, cocoa, coffee, all of those, they spoil. You really
Hmm.
can't hold them. But metals you can hold forever.
Hmm.
So you could squeeze the copper market, for example. I mean, in fact, that's been tried too. It does concern me, but let me just go on another moment. James Dines, the late great Jimmy Dines, the Dines letter, he talked about a natural squeeze. And I thought about it. Wow. And he wrote about this probably 20 years ago. And a natural squeeze is what we have in silver right now. We are not mining and recycling enough silver to meet the demand. Therefore, we're eating the above ground supplies I mentioned earlier again and again and again. So if everybody stays static and the normal coin retail investment market stays at 200 million ounces a year, because people collect coins and hedge silver in their portfolio, and no one gets excited and buys more than the normal 200 million ounces, industry keeps increasing the amount of solar, electronic vehicles, AI, and everything else that needs silver. It keeps
Hmm.
a higher and higher demand, where you start eating the above ground stockpile faster and faster and faster. That's a natural squeeze. That's a squeeze that
Yeah.
nature basically is taking over. It's no Hunt Brothers. It's no Saudi sheikhs. It's no, family offices combining. It's no Wall Street silver apes. It's none of that. It's the natural law of supply and demand, where the demand is greater than the supply over a certain amount of time, and you don't have enough of it. And by the way, it's essential. It's required. It's non substitutable. In fact, it is the most important element on the periodic table for a high-tech society. Now, oil is more important as far as how the world works. It runs on energy. Without energy, nothing happens. But as far as an element on the periodic chart, silver's the king of kings. It is the only one that if you lost it, we wouldn't be doing an interface over a computer because our flat screen monitors wouldn't work, our keyboards wouldn't work, and the connection electronically wouldn't work. So take silver away and you're in the Stone Age. Now, silver exists. It's already in all these places. But am I going to take my monitor down to the junk dealer and I'll get a price for it? But I mean, a lot of these things aren't worth getting the tiny bit of silver out of it economically. If it takes, I don't know, 1,000 BTUs energy, in other words, it takes this much melting power to melt my screen down and extract the silver out of it, and that costs $10 and I get $2 worth of silver, I'm not going to do it.
With what we're saying about silver prices, the expectation is, should go up, and the demand for silver expectations should go up. There's this thing called demand destruction where eventually you get to this point where the price goes up and the demand eventually it starts to fall off because that price just got too high. Do you foresee that coming along the way anywhere?
Well, I think it's pretty much a natural law. I think everybody out there that owns silver for investment or security purposes has got to make a decision whether they're going to sell or not. I think probably 80% of the market's willing to sell at some price. And yeah, you can have it both ways. You can have your cake and eat it too. Let's say you want to leave a legacy investment to your heirs. All right, I sell 80% of it at X price. Or I'd filter out, like I said, X, Y, and Z, get out near the top. I didn't get the top. I'm not going to beat myself up. I did well. And I saved 20% to pass on to my granddaughter. Right. So you could do both. Or you could, sell it all, pay debts, start a foundation, start a new business, buy back in the stock market, start a real estate company, whatever. There's lots of things you could do with the proceeds. But yeah, I don't think anyone's holding silver, from now until the day they die because they have some type of religious belief around the metal. I mean, that's kind of what the Bitcoiners, the maxis do. I'm not in that camp. So anyway, yeah, I think that would be my answer.
All right, David Morgan, I want to thank you for your time and insights. And as always, can you let us know how we can follow you and get more of your insights?
Yeah, I just appreciate anyone going to themorganreport.com, signing up for the free letter. If you're interested in the paid service, just click the explore the subscription button. And then, Patrick, we haven't talked, but I finally released the documentary silversunrise.tv. That's the URL to watch it for free, silversunrise.tv. If you just put that on the show notes, 2.5 years to make that documentary. Most of the feedback's been pretty positive. And it takes a look at the kind of the spiritual side of money, kind of overcoming the fear and stress of control of money. As far as I'm concerned, the money powers use their fear of control and it stresses people out. Most people don't have enough, or their bills are too high, or their currency's not worth as much. So that documentary goes into that area of the money problem. And so, again, the comments have been pretty positive. And I'll take the negative ones. I mean, anyone could be a critic. The easiest thing in the world is, oh, you're full of it. Anyone could say that about anything. But constructive criticism is certainly worth paying attention to. So, yeah, if you take a look at that, I'd appreciate it. In fact, the next time we connect, maybe you could have watched it and we can talk a bit about it.
Yeah, absolutely. I'm gonna go watch it right after this. But David Morgan, and I'm going to say it, the Silver Guru. I want to thank you for giving your insights on precious metals to the investors out there to get that edge that we all need. And yes, I hope we can do this again soon.
Same to you, Patrick. Thank you.
That was David Morgan, the Silver Guru, giving you the edge on the economy and precious metals. And if you want more precious metals insights and would like to know about optimizing your precious metals portfolio, visit us at www.auctusmetals.com. Please do subscribe to our YouTube channel and give this video a thumbs up.